So that was a pretty decent drop to the downside. Anybody that opened up those puts would have made some money closing them. Even if it would have been too early in the day to close, you still would have made a nice chunk of change right at the open as advised. Or if you waited till midday, the secondary place to get out, you would have made even more money. So, I mean, yeah. Hopefully some people made some money. Hopefully we see some some rule of karma come through. Hey B, I'm doing well. How are you? Google stock next week. All of this went into the Google 1 month, guys. All of these videos, all of this stuff right here is part of the Google 1 month. It's not, it takes a lot of time. Sometimes people are like, I've had people be like, I'll be on the street and I'll meet someone and they'll be like, oh yeah, what is it going to do at 10 p.m. tomorrow? And I'm just like, dude, I don't like pull it out of a hat, you know? People have no concept. Which one am I looking for here? Okay, here we go. Interesting. Well, I've got that resistance on the 6th. I'm like, why don't I see a high here on the 6th? But there's a correlation to the resistance here on the 6th, on the 1st, and on the 6th, so that would make sense. Anyhow, so we're looking at next week, 19th. Yeah, it's looking like a pretty bullish week. 3 crisscrosses through the same price level on the 19th with a peak towards the end of the day. There's a swing trade there, or excuse me, there's a day trade there on the 20th, it looks like. And then a notably large move. So like here on the 22nd, it looks like towards the end of the day on the 22nd, there's likely a decline, and that decline offers an opportunity to open up a long position. We have a pretty significant move to the upside on the 23rd. If it's not on the 23rd, then on the 27th. But it's a tricky reading because we've got the highs and the lows correlating to the same placements in most of these. The thing is that we don't see a high, we don't see a low correlation conflicting in this week. So this is pretty bullish, guys. We do have this move higher. Okay, so the day trade here on the 20th, my sense is probably there's a big move either at the end of the day on the 19th after we confirm bullish trend, there's a big move to reach a peak. It'll be like a move to a distant resistance on a 1-day chart. That would, and it would be like a breakout kind of deal. That would be an opportunity to open up a quick short position, and then it looks like we decline through a support level that we recently declined through once before, so over like the previous few days, and reach a support level. Off where the support level we move pretty high though, so like you got to be quick. It's a quick day trade if you're going to pull something like that, but more so, I mean, it's better off to stay on the long side in the case of Google, because it looks like this is 21 is bullish, 19 is bullish, 20 is bullish, but indicating that we opened lower on the 21st. 22nd isn't bullish, obviously, but it turns like there's a big move at the end of the week on the 23rd. It looks like that probably continues. It's possible we see another high on the following week as well. Hopefully that was concise enough for you. Hey Raymond. Yeah, love it. Yes, I love to hear this stuff, my man. I love it. Made my day. Let me just screenshot that real quick. All right, so we're looking for, it's the end of the day now, a good time to open a call option position that would be closed Monday. Monday's looking really tricky, Raymond. Like, somebody was asking me about Monday the other day. There's a lot of conflicting energies here. But I wouldn't be opening up a call option here at the end of the day. We do open higher. How much higher is hard to say, but we have a crest in the pre-market that we decline from, and the reason why I'm saying not to open up a call is because on the 1 month, where's the 1 month? On the 1 month, we have a decline that increases with momentum moving forward in time. On the 1 day, we have the exact opposite card for the theme. So there's a lot of conflicting things. There's an Ace of Cups and an Ace of Wands in here. There's definitely at least one big price swing. And Raymond, if you're going by the 1 month, around the 19th, the 1 month is off by a few days. I would definitely be going by the 1 days. You see, we've got a month's low correlation on the 19th when we look at the 1 days, and when we look at the 1 month, we have a month's high correlation. But that month's high correlation actually took place on the 14th when we look at the dailies. Sometimes that'll happen with a monthly. So my sense is that you want to be you don't want to be going long into this weekend, because it's there's too much conflicting energy. There's going to be a lot of volatility. There's a day trade midday in the midst of a steep decline. There's an opportunity to open up a long position, and then we move to the upside, and there's opportunity to close. This is around just a little bit before midday, it looks like. So you go from opening a long position to closing a long position and opening up a short position there. And then I would hold that short position until the 21st in the morning. I mean, you might make money opening up a call at the end of the day here, but the thing is that there's a reason. There's always a reason. See, like, it may look like a good trade. I learned a long time ago that when I look at these cards and I see things that look like good trades, but there's no advisement to trade, that there's a reason why it's not a good trade, even though it looks like it. Like, if it was a good trade, it would be like there would be advisement for me to trade like that, and there isn't. So there's going to be a reason for it. Like, maybe in the pre-market we open higher, but by the time we get to the open, we've declined substantially, and you miss out on that big move to the upside. I mean, there's a million reasons why. So I would say steer clear of that, my friend. You're better off looking for this day trade, and if you don't have the time to do the day trade, if you got stuff to do during the day, you're better off opening up a short position. And I just want to point out, guys, get rid of all these lines. This line right here, this vertical line that I've just made with all these other ones, that's the 12th. Oh, sorry, that's the 13th. So the influence of retrograde began on the 12th. Let's see what time on the 12th. There's a really good website for retrograde. It doesn't just show you Mercury retrograde dates. It shows you all the planetary retrogrades. Really good site. cafeastrology.com/retrogrades. Explains what a retrograde is in a pretty good diagram as well. Alright, so here we go. So 6:26 a.m. on the 12th. So what you see here is we're in a downtrend. There's like this pause on the 12th, and this like whipsaw action and a reversal, and then we're moving to the downside. But you can see there's always like a significant like moment or point of note, like right on the edge where retrograde starts, and then the volatility increases as we move forward into the 29th. Some of these lines. That's hard to say, my friend, because there's so much going on Monday. But it looks like, so we have a crest. I would go rather by time frame. I would go by sequence of events. All right, so what you're going to see is we have this crest that we sell down to and through a support level in the pre-market. We do a U-shaped reversal, come back and reuse that support as support, and we're rotating sideways along a key support at the open. There's a peak in there that is easily missed in that first half hour, and we decline from that peak, rotating sideways. Matter of fact, it's really, really risky to open up a call there, Raymond. I mean, what I would do, I would be more focused on the short position to hold over the next few days, because that's really where the money's made. But if you were going to open up a call, what you want to do is you want to look for this period of sideways rotation. There'll be a fast sudden move higher marking the end of that period of sideways rotation. And then from that fast sudden move higher, we should have a decline. That decline is going to take us, it's an opportunity to open up a long position on the scale of a day trade, and you'd want to hold that long position till we meet a critical resistance level. So the decline will turn into a move to the upside. A rally that increases with momentum moving forward into a critical technical price level. When we hit that critical technical price level, that's where you want to close out of the calls. And by critical technical price level, I mean on the scale of a multi-day chart, not on the scale of a one-day chart. It's the science card. So when we hit that resistance, we'll go from a notable decline to a notable rally. You want to be catching that notable decline to open up the calls. And then when that rally commences and hits a critical resistance level, that's when you want to get out. You got to be fast with this trade. It'll probably be before midday. But really, if you're gonna do that, it's risky because I'm not right all the time, right? And what if you end up in this long position and then the next few days are all down? That would suck. So I would make sure that you allocate funds in case that happens, to make sure that you can open up a short position, because the short position is more important over the next few days than this quick day trade, to be clear. Like, that's a risky maneuver. You don't want to, this isn't something you want to be like putting funds in that you would utilize to open up a short position in a few minutes. Like, if this goes sour and uses your funds to open up a short position, that would suck. So if that's potential, don't do that. Just wait for the short to open up the short position when we hit that critical technical level. And so that critical technical level, on the 13th, we have the science card. Oof, that could be some move there. We need to notate this price level here. It might not be though, guys. Like there's, remember what first and most important thing to remember about the 19th. It's going to be extremely tricky. There's at least one big price swing in there, at least one. Yeah, that could work, Raymond. One call option and 4 put options. Yeah, that's probably a good maneuver. Oh, did I mark that, or did I forget to mark it? Forgot to mark it. Where did it go? It didn't stay. That's interesting. Alright, well, in any case, it's supposed to be yellow anyways. Right, so we open up higher. This is probably a pretty steep decline here. Pretty steep decline here, it looks like, but also pretty big move to the upside afterwards. Like that, this is a big price swing here, guys. Is what I'm picking up on, a pretty big price swing here, and it's like the beginning of this Ace of Cups is really the beginning of a decline. So it offers an opportunity, like I said, to open up a long position, but that's a quick trade. You want to be on the bearish side, heavy on the bearish side, if you're going to be opening up a long position, just like Raymond is discussing. Hey, GRN. Oh well, yeah. No, I would purchase the put. I would purchase the put when we hit that technical price level. The same technical price level that I'd want to get out of the calls. I'd be looking to purchase the puts. I do not recommend a put spread before the end of the day, Carolyn. Well, hello. So you're on a flight? That's pretty cool. People watching my stream from the airplane. Um, yeah, we were just discussing the 19th is a really tricky day. There's at least one really significant price swing in there. There's a possibility of a quick day trade. But overall, you want to be on the short side. And what we're looking for is this technical price level about midday. There's this decline before midday, and then after that decline, there's like this whipsaw and a big rally higher to reach for a critical technical price level of the science. That's when you want to get in on the short side, and that's really the main trade that I would be looking at. I wouldn't do puts now. Yeah, I mean, there's a lot of unclear, a lot of like conflicting energies, a lot of that's what volatility energetically feels like. It's a lot of conflict, a lot of like ambiguity, kind of like clustering on top of each other. So it becomes unclear sometimes because there's so much going on in a short amount of time. It like stacks on top of each other, and the sequence becomes difficult to determine. So I try to steer clear of like guesstimating what I should do and just hold till there's a more certain time. And my sense is really you want to look for this critical technical price level, this resistance level that we hit after a sharp drop and a notable pop. We meet a technical price level. That's where I would get in on the short end. You know, there's a notable move here. Looks like overnight, but the thing is like I said, it's difficult to determine where it may be a big move overnight, but by the time we get to the open, the story may be very different because there's quickly missed. Wow, there's something going on outside, guys. I'm sorry. One thing about Manhattan I don't freaking understand. So if it's not a cab, and if somebody's driving in New York and it's not a cab, 99% chance, or let's say 95% chance they're not from the city, okay? You need to understand, move your ass when you hear a fire or a siren. Like, for whatever reason, people just sit there and expect, like, okay, it's okay for the light to change and then I'll move. Like, why would it be any different than anywhere else? But for whatever reason, they just sit there and, like, the people with the sirens, they get stuck behind these cars that don't understand. Move your ass over. There's enough space. They just think, like, there isn't enough space. There's more than enough space. My God. It really aggravates me because there's a hospital right here, so I see people do that all the time. How would you like it if it was your loved one that was on their way to their hospital and somebody was just sitting in front of them waiting for the light to change? Like, unbelievable. Appreciate it, Carolyn. I forgot what I was saying, but Wow, that would be something. I don't think we hit that price, that sign. It would be really something else to hit that science level from the 19th. See, the reason why I say not open up calls for one thing is like there's no, like I said, there's no guidance advising me to open up calls. There's a trade here in the last half hour, but I think it was right there, and still very difficult to determine exactly what it was. We have this ace of swords at the end of the day, position oneself in both directions. You could do that. You could position yourself in both directions here. That might not be an awful idea because there is a pretty big move. If you wanted to open up a straddle or a strangle, that's not something I would advise against. But in any case, it would be risky to open up just calls because we open up higher, but there's a selling from a crest here in the pre-market, peak that's easily missed. There's no trade opportunity first thing in the morning based on what I'm seeing here. And then the first trade opportunity is not an opportunity to close a long position. It's an opportunity to open up a long position in the midst of a decline. So that wouldn't bode well for opening up a long position right here. You know what I'm saying? So it's hard to determine what the price level is going to be ahead of time, but when you look at a multi-day chart, you're going to find us rallying to like an important price level. Like this isn't going to be science level, right? Well, like this isn't important enough of a resistance level here to be science. This isn't really important enough of a resistance level to be science. This right here, now we're getting into important. See how there's a lot more, like that could be science level there. I have this 1213 as the science level as marked. So the way that we determine that, like on the 13th, and this doesn't always hold true, guys, but on the 13th we had the science level. We were establishing an important critical price level. So I marked off that resistance level that we had on the 13th. Here it's 399.06, right? So sometimes you come back to these price levels, they become markers for actual price levels. Okay. So I think probably what happens is we open higher in the pre-market. We open higher in the pre-market, decline, end up at like a low somewhere before midday in the midst of that decline, and then we turn around and we rally all the way to the science level. So we probably open up above here. In the pre-market, probably above this 385 mark. Sell from a crest. We probably rotate around here. Let me get that science level back. It could be this level up here. I mean, it's a possibility. That would be a really significant move to the upside, so not necessarily the case, but when we rally and hit resistance and it looks like an important resistance, that's what I would indicate, that's what I would deem the science level, Raymond. That's the best I could do for you there. Hey Brian, no, I mean I do the S&P every day, but it's not like isolated just to the S&P. If you have a question about something else, I could take a look. exactly do you want to know about oil? Is there like a time frame you're looking at? All right, Raymond, have a good weekend. Good luck with your Christmas tree shopping. All right, trend to reversal. Okay, so you want to know for the 19th what oil's going to do? So I got the Princess of Wands. Princess of Wands is a rally that offers an opportunity to open up a short position. So I would look for rallies on the 19th and do that basically. My perspective on any rallies in like USO or something would be opportunity to open up a short position of some kind. Yeah, the following day there's a failed attempt to break through a key resistance level on a multi-day chart. Followed by a decline through key support on a multi-day chart. And then the day after that, we have sideways rotation along the key support, increasing with bearish momentum or bearish sentiment as we move forward in time. So, those 2 days, the following 2 days would definitely add up when we're talking about an opportunity in the midst of a rally on the 19th to open up a short position. And that would also go hand in hand with what we're talking about for the S&P, an opportunity to open up a short position midday in the midst of a rally. Oh, I wanted to let you guys know. So right now we have the early access on the website Tarot for Traders for $17 a month. I wanted to let everybody know on the stream that price is going up significantly next year. Anybody that's already got it at the $17 a month, I'm not gonna raise that price on them. That'll stay $17 a month for as long as they do the early access as a thank you for being one of the early supporters. But I just wanted to let everybody know, if you are planning on doing that at some point, you probably want to do that now rather than later, because it will go up at least to $50 a month. So it's 17 right now. It's going to go up to 50 probably, maybe higher. We'll see. That being is because there's other, like, you get access to a lot more than you get access to trade information that you would only get if you paid for it through one of like the subscriptions. You're welcome, Brian. All right, guys, I'm gonna grab a drink like I always do. Wait and see if there's any last questions. If there's no more questions, I'm gonna roll. I'll be back in a minute.
Hey, buddy bear. You're a good boy. You're a good boy. Everybody loves you. Everybody loves you.
Finally stopped raining. It's been raining for like 3 days.
Everybody loves you, Hermes. You're the best, you know? You're the best. Everybody loves you, Hermes, you know?
All right, guys. Another thing I was just thinking about. So normally I get a lot more of these 1 months out for January, but we have Mercury retrograde kind of taking over the early part of the year, and I don't want to do 1 year readings during Mercury retrograde and then have to rely on these readings for an entire year, but they were done during retrograde. So I'm doing as many 1 years as I can get out of the way before the 29th. Not leaving me much time to do monthly. So chances are, if it's not a paid month, if it's not a monthly that's being paid for, it's probably not getting done in January and February. So I just want to give everybody a heads up on that. It's the 1 years are way more important. So if you are interested in guaranteeing that one of these monthlies gets done, you can go to the website tarotfortraders.com, sign up on the website for the recurring subscription, and enter the ticker that you're interested in having done. It's really, outside well, it's a really hard day to determine direction. That's what I've been saying all day, but I do know that there's going to be a big price swing here midday, and that's an opportunity to open up a short position. I don't know about if you're looking for a day trade. I don't know how great of a day trade it would be to open up a short position. It's possible. it's possible that you could do a day trade there, but really that's not what I'm concerned with. I'm concerned with it's a lot more clear to open up a short position here and then hold it until the morning of the 21st. Oh yeah, they go up. They get recorded and they stay up on the site after they're done. After we're done streaming, so I wouldn't worry about that, Caroline. We go significantly lower outside well over the next few days, to be concise for you. But in any case, guys, so if you're interested in like, right now the only two monthlies that are getting paid for are Silver and Meta. So to be clear, like, chances are, I'll try and get some of them out, but chances are if it's not a paid for one, it's not getting done in January and February because of Mercury retrograde. That leaves me very little time to get as many 1 years as I can done out of the way before we hit retrograde. So if you are really interested in one of these 1 months coming out, you need to see that, then best bet is to go to the website tarotfortraders.com, sign up for the $29 a month subscription, highly worth it. And that'll guarantee that it comes out. Not only that, but you also get the emailed version, which is got an extra bit at the end talking about the best trade opportunities that we see for the month. But with that said, guys, thank you so much for watching. Follow that rule of karma, my friends. And remember, guys, rule of karma, it's important to follow that, because when you don't follow that, like, your trades aren't going to go as expected. You need to make sure that you're following that rule of karma, because that'll allow you to keep making money from these readings in real time. With that said, guys, thanks for watching.